Hey, good afternoon, everybody. We're going to go ahead and get started with today's session. But before we do so, I just want to take a moment and thank our sponsor for being here today. They're the ones who help keep the cost of the class low and today free for you. So with that being said, we'll go ahead and welcome up our sponsor. Thank you.
Hi there, I'm Becky with the Florida Building Inspection Group, and we have expanded down into this area from the Brandon area. We are not new to inspections. We've actually been doing inspections, home inspections for new construction, commercial and residential for over 10 years. So we would love to partner with you on your next client who is purchasing that home and be a partner, be a trusted partner for you. So I've got some business cards here. I know those of you that are watching online, I do have a raffle to give away a $50 gift card, and I'm just going to see who our winner is. Miss Cassie, you're the winner. She's very surprised. And just by a show of hands, has anyone heard of the FBI group? Just wondering how we're doing with our marketing. Okay, a couple of you, that's good to know. Well, once again, we thank RASM for the opportunity to be here and be a business partner sponsor, and we look forward to seeing you in the neighborhood. Thank you.
Okay, perfect. Okay. Hello, everyone. Good afternoon. Welcome, everyone, in person and virtually, to our insurance panel presentation. Big thanks to our panelists, who I'm going to introduce. Just so you all know, we're going to get to a part where you can do questions and answers. I'll be moderating the chat and the in-person questions. So just be on the lookout for that. So today we have with us Warren Chin, who is an attorney who specializes in homeowner insurance, homeowners and business owners when their insured denies or undervalues their claim, which oftentimes results in bad faith litigation. His practice also focuses on helping catastrophically injured individuals with an emphasis on medical malpractice. Warren graduated cum laude from the University of Florida Levin College of Law, go Gators. After law school, Warren began his legal career in Miami at one of Florida's largest law firms. He was mentored and supervised by Thomas E. Scott, a former state and federal court judge and U.S. attorney for the Southern District of Florida. After marrying his law school sweetheart, a local transactional real estate attorney, he moved to Sarasota to be with her and start a family. Warren is actively involved in the community and sits on the following boards. He is treasurer for the Sarasota County Bar Association, the Young Lawyers Division, American Bar Association House of Delegates, an appointed Florida delegate, the University of Florida Law Alumni Council, and he is elected as the 12th Circuit representative for the Florida Bar Young Lawyers Division.
Good afternoon, everybody. Thanks for having me. I really appreciate it.
Thanks for being here. We appreciate it very much. Next, we have Maria Masucci. Hopefully I'm not butchering it. Maria is with Flagstar Bank Home Lending. She's been assisting customers with their home buying needs for over 30 years. Maria is a President's Club member and closes over 125 transactions per year. Maria has been voted a 5-star mortgage professional for the past 8 years. She handles all types of residential home mortgages, such as first-time home buyer, VA loans, FHA loans, conventional, and jumbo. Maria is the past president of the Gulf Coast Mortgage Bankers Association. She's been involved with many RASM committees over the years and enjoys working with all of our association members. Oh, I'm going to butcher your name too. I'm so sorry. Margaret Galewski is the owner of Galezano Insurance with a physical office in Cape Coral. Margaret works in Sarasota regularly and is proud to have a large client base here. She's a licensed professional who's been in the industry for over 25 years. Margaret has lived in Florida for 21 years and has navigated through hardened insurance markets before. So we welcome that expertise. She's happy to be here today to help share as much information as she can about what's going on in this challenged insurance industry. So thank you so much, panelists, for joining us today. And I look forward to hearing the collective experience that you all are going to offer us today. To begin, I'll let each panelist say a few things, just get the ball rolling, and then from there we can entertain some questions and see what rabbit holes we go down. Anyone want to be the, who should I call on?
Good afternoon. Again, my name is Warren Chin. I'm a local attorney here. I'm a shareholder at Eastmore, Crauwels, and Dubose. We're a law firm down in downtown. We only have one office. We focus in on the 12th Circuit, DeSoto, Manatee, Sarasota. A lot of my practice involves homeowners insurance type claims. Either the insurance company will undervalue their claim or deny their claim outright. And a lot of homeowners are just looking for guidance, and that's kind of where I get involved. I help the homeowners, so I'm a little bit more jaded compared to maybe the insurance side. But people are paying their insurance policies for 20 some years, never making a claim. And then the 21st year, they're making a claim and they get denied. And they're just in trouble because they can't afford it, or they just didn't, they thought their insurance covered it. And that's kind of where I insert myself. I'm sure some of you, the homes you're going to sell or are buying, have those types of issues, and that could be a resource for you guys.
Great, thank you.
Thank you. I will go next. My name is Margaret Galewski, and I do own Galezano Insurance. And just to go off of what Warren just said, I'm the front person to help individuals explain what the exclusions are, so they don't end up in Warren's office not understanding why they don't have coverage, like limited water damage or actual cash value on their personal property. It's always boring to talk about insurance until you have a claim. So as an independent agent, I value the local relationship. That's why I do so much in person, to explain the policy and give options before the claim happens, because if we knew it was going to happen, we'd buy the best. So that's why I'm here today, and I hope I can help shed some light on what's going on and how fast this industry is changing and how much trouble it's in.
Thank you. Thank you.
Hi, I'm Maria Masucci, and I'm going to be here to give you the lending aspect of it, because of course you have buyers that need mortgages. That's a big issue with getting pre-approved, because a few years ago, I used to use a certain number to pre-approve somebody, and now it's like twice as much as what it used to be. So, that can cause your deal to collapse, or we have to restructure, or sometimes they can't even get insurance, and then that's a big issue as well. So you kind of need to help your clients navigate that, whole situation. And I'm here for any questions you have, and I could also just give you a little information about like how that affects the payment and the closing costs.
Excellent, thank you. To open it up, we can start with the questions that were pre-submitted. I need to actually pull them up to find them myself. So to give everyone some background, I think everyone, if you've signed up for this, you maybe have an idea that the state of Florida right now is struggling quite a bit with the insurance industry. We're struggling to retain companies to write in Florida. We're struggling to make sure that the companies that are writing in Florida have substantial reserves to pay claims when that time comes. We're also finding it the perfect storm of a market that is super hot and cash driven, it would seem. So where does that leave your client or your customers that need to finance their purchase? Where does that leave listers who understand that potentially their home might have some insurability issues? So the first question, please forgive me as I find it. Okay, so the first question came, and it is, could the panelists discuss a little bit about the current coverage for roof life and how we prepare our buyers for that? If the insurance is not available for older roofs, should agents be ignoring listings that have roofs that are over 15 years old? So I will start, let's start maybe with insurance, and then we can go to lending and litigation.
As you heard in my introduction, I've been in this business for over 20 years, and it's never been so hard. What I tell you today could be very different tomorrow. Every time I leave for the day, it's like 5:30 comes and carriers are sending out bulletins of more restrictions. So right now, it's challenging. You said 15, but we're seeing 10 on a shingles.
Oh, my goodness.
With some carriers, and like a domino effect, one goes and the rest go. The same thing goes for, there's a little more room for a tile roof, not as much. Some carriers have gone to 10 years as well. So it's definitely, I don't want to say ignore listings. I just want to say we should be one of the first people that they're speaking to before making that offer on the house, to find out how insurable it is. Because again, what I tell you today could be very different tomorrow. There's limited choices. The newer the roof, the better off you are. We're hoping that changes. There were some proposals that did not go through for legislation. So it looks like we're going to be in another hardened market for at least, we're hearing 2 to 3 years.
Wow. Okay. Are there other aspects of the structure that need to be addressed? Roof is an obvious one, but is there something else, like maybe electric or anything else that's red flagging?
Great question. What we're seeing on the insurance end is when your buyers walk into that brand new kitchen and that brand new bathroom, the first thing an underwriter does, or the first thing we do as agents, is pull up the permits. So if that plumbing hasn't been updated before the exterior of the beautiful countertops, and it's great to have those beautiful granite countertops, but if the plumbing is 30 years old, that's a red flag for the carrier. A water loss is more likely to happen. So now carriers are requesting proof of updates. And a lot of times a new home buyer will think, well, yes, I have a brand new kitchen, it's been updated. On our end, we say, but the plumbing wasn't updated, the electrical panel wasn't updated. So that's all original in the eyes of a lot of carriers, not all. I'm speaking in general overall terms here.
Gotcha. Would you say that, and maybe this is a question more for Warren, that so the buyer is coming to you as far as insurability goes, you're doing permit checks and seeing how old underlying issues are. Is that something that maybe sellers should, and I know this is not totally on topic, but should be considering from a disclosure, Johnson v. Davis?
Well, you know, Johnson v. Davis requires you to see, first you have to know about it. And then a lot of times, who's looking at their plumbing? I'm not, I'm a homeowner. I'm sure you're home. How often are you looking at it? There's general backups, and you know, you call a plumber to, you know, snake the thing, but that may not rise to the level of, you know, a full disclosure on your seller disclosure at Johnson v. Davis. It may, depending on how much you know, but again, a lot of people are just not looking at your plumbing. To kind of dovetail off that, a lot of homeowners will call me and say, you know, I had a water thing burst, my floors are ruined, this and that. Do I have coverage? No, you don't. Because it's just, a lot of them either have limited water damage or full exclusions for water damage. So your insurance policy, it's like a contract. It is a contract. You guys really need to pay attention to that to know what's in and what's out.
Okay, thank you. I don't want to leave you out. I don't know, just jump in anytime if there's a lender perspective. The second question that we got was also to address flood insurance issues and costs, particularly for properties that are located on the Keys in AE and VE zones. I don't know who would like to begin with that. Maybe insurance again. I'm picking on her.
So effective October 1st of this year, the whole way FEMA they went to a single risk rate modeling. And what does that mean? When you were getting a FEMA policy, the first question I would ask was, give me the elevation certificate when you're in an A and an E zone if you were in a post-firm area. If you were pre-firm, meaning before the community participated, then it wasn't as important, could still be beneficial. But now the new single risk rate modeling really goes by other factors where the elevation certificate doesn't carry as much weight. So we are in these coastal areas seeing drastic increases. There is a provision in place. So you as realtors, if you're the listing agent, might want to check with the seller, because a flood policy is transferable. Different than homeowners, they are not. But in the flood world, it is a transferable if it's a FEMA policy. So they'll be, if they transfer that policy, then they won't be impacted by the rate change as fast as if they were going to buy a brand new house. one quick example, and then I'll turn it over to one of you. One quick example is I had a client building a brand new home, and he had to purchase flood insurance while the home was being built, which thank God he did, because he closed in November. If I was to write him a brand new flood policy in November, then his rate was going to be $5,000. Because we were using the old rating system, he's now on the glide path. He pays $560 a year. It's still going to go up a percentage every year till he goes to at-risk rating, but he's in place for that. And I've done that for clients with the assumption as well. I've almost had people lose their deals because the flood insurance was so high, where my client was paying $500 and the new owner was going to be paying $4,500. So just be on the lookout for that.
That is a great, I think, bit of advice. And I was going to actually dovetail into lending, which is, so when you're in underwriting and you're looking at the cost that this person has to pay to own the home, what can we do in this process?
Say that's very important as well, because I actually always recommended when I got a loan that we found out was in a flood zone, that we always ask the listing agent to see if the seller would be willing to transfer that policy over to the buyer. The flood is, it's a factor, because it's, again, if you have a house that has insurance and flood, that's double, usually or more than that. Of course, the cost for the monthly payment. So, we do allow private. The lending industry in the recent years has allowed private flood insurance to be used. We still always, only require FEMA. Some programs like the government ones, are still requiring FEMA only, so you have to check with the lender. But the private insurance companies, from what I see, are a little bit less expensive. But they might not be here in 10 years, like FEMA will be. So yeah, you have to look at that. Sometimes I'm sure we're talk about that, right? Or whether it's a good company. And as long as the banks will accept, AAA rated, and they have certain requirements to follow around that. But yeah, it's gonna be it's a little bit of a challenge sometimes.
If I could just interrupt one quick section.
Sure.
A lot of times we all live in a flood zone. So, I'll speak to realtors on a daily basis and they'll say it's not in a flood zone. I beg all of you not to say that, because 25% of all flood claims happen in a preferred risk zone. So I just don't want to see that homeowner or that buyer come back to you and say, you told me I wasn't in a flood zone. When any client that comes through our office, we always give them a flood quote, whether or not they ask for it, because we just want them to be aware it's available, it's an option, and the not in a flood zone is just,
Not in the risk
the lender
zone.
might not require it, but it doesn't mean that just because that line stops, that water is not going to come over. And that's why there are preferred risk rates as well.
Thank you. Warren, did you want to speak to the private companies, what you're seeing as far as having to help people get those claims paid, and maybe, whether or not it's from the litigation side and claim making side?
So I don't deal with flood stuff only because there's a lot of different loopholes and the policies are a little bit different than the standard homeowners. But in terms of, roof claims or plumbing claims, again, the first thing I do is I look to the policy, because that's going to determine what coverage is or not. Again, I'm a little bit more jaded because I'm representing homeowners, but insurance companies will tell people that you're not covered. And I look at the policy, I'm saying, no, they are covered. And they won't tell you everything about it, which is why you have to talk to her about what's in there and what's not in there, because there's definitely two different buckets, excluded or covered. But to answer your question, generally, it's just getting harder and harder for insurance companies to pay out. And that's one of the reasons we're going to talk about later, is why insurance companies are pulling out of the state of Florida. The cost of business is getting really high, and there's a lot of different reasons for that. But it's just getting harder for them to cover full claims.
Okay. Yeah, we're definitely going to get into that. We do have a couple of follow-up questions to our previous question about the roof age and insurability. The person who actually sent that question in asks, will insurance companies allow a covered grace period for the buyer to replace the roof?
It's a great question. 5 years ago, I would have said yes. Today, when I speak to the carrier reps and we ask that question of underwriters, we get a hard no. The reason being is because that the day they're responsible for that home, the day they take the policy, And what's been happening is, certain companies go door to door and they talk someone into filing a claim. And the next thing you know, this very brand new company who said they would cover it until the roof could be replaced is now buying a new roof. So I can see Warren's side and I can also see the carrier side.
There are no white hats in the whole thing. There's claims that are being made that shouldn't be made, and there's claims that are being denied that shouldn't be denied. And it kind of just makes a perfect storm of what's going on. And then we have a hurricane hit up in the Panhandle. That was hundreds of millions of dollars for all those companies, and they're starting to see their bottom lines. They're still making money, don't get me wrong, but they're not making as much money. So.
If I can kind of tell you guys some of the things I've seen, because of course, as a lender, when we find out there's a roof issue or we can't get insurance, then we have to kind of deal with it mid-contract, I guess you could say. So some of the things we've done is have, obviously the seller, put the roof on prior to closing. We can also do an escrow holdback sometimes. I know a lot of people say, oh, can't we do a holdback? But the roof is really not like an optional thing. So lenders don't really like to do escrow holdbacks for roofs. So it's not necessarily the best. You could do a seller where the seller puts their proceeds in an escrow, until the roof is done, or if you want to work it out that way, that'd probably be better, cash deal maybe, But if you're doing lending, either the seller has to pay. We had one where we actually have a couple of roofers in town and some are members of the board here, and they will actually even work with the seller to put the roof on and get paid at closing. So there's different things we've done to kind of get that roof on so that we can close. Some buyers are willing to pay the higher insurance, and Margaret might speak to this. Some insurance companies will exclude the roof, or they'll let them kind of close, but knowing that there's going to be a new roof in the future. And then of course for the lending part, the customer has to qualify with maybe a $5,000 premium, knowing that they're going to maybe end up getting a $2,500 premium. And that's a little more red tape for the buyer, because then they have to redo their escrows and, a little bit more down the line after post-closing. But there's different ways you can get your deal done if you have that issue. I am recommending to a lot of the listing agents that I work with that, something that's to have a conversation with when you go for a listing appointment. And, of course, hopefully everybody's asking how old you think your roof is, but, if you think there's an issue, maybe work it out with them, or what would we do if, the roof is going to be an issue. I always recommend you call an agent as soon as you're going to get a listing, and maybe get a quote or find out if you're going to have any issues getting insurance for that property. And I'm sure most agents, hopefully don't get too upset, because we are calling them much more lately, because of course, agents have their team, you have your lender, your insurance, your closing. So, we get a quote right away if we can, because we just need to know upfront as soon as possible if somebody's, going to qualify, or if it's going to be an issue.
Smart. Okay. One attendee virtually asks, what does flood, the first one was, what's involved in transferring the policy that you mentioned, and whose responsibility is it to investigate that when they're looking at this potential flood
It has to
required?
be agreed upon by the existing homeowner. And then there's an assumption form that has to be completed by both parties before the closing takes place. Very important to understand, the FEMA policy is not going to prorate the difference in the premium. So if there's any premium owed to the homeowner, who's selling the home, that has to be agreed upon before. Maybe they would talk to whoever's doing the loan closing, but that's between the two individuals and for the seller of the home to agree upon. If the documents are not signed before the closing, then the assumption won't be done. FEMA is very strict. All of the rules have to be followed.
So
I recommend doing it, before the closing, having that declaration page in hand, because we just don't know what can get held up.
yeah, that's very important. I think the key takeaway is make sure your parties are negotiating the proration of the premium, and make sure you're communicating that to your attorney or title company that's handling the closing, and make sure that you're doing this well in advance of your closing date, if that's the process you're going to go
On the
through.
lender side, when we know that we're going to do a transfer of a flood policy, we would need the deck page and we need proof of insurance before the customer will even get to closing.
Mm.
So of course, then we can also help, facilitate that credit at closing.
And what I'm saying is if you wait till the day before closing, FEMA moves on their own time and they take them in the order it's processed. We don't have, a lot of them are now like call centers, remote working. So ever since COVID, I feel like everything takes twice as long, which is why I say get a jump start on it. Don't leave it for the last minute.
One thing that's so important, you guys are all seeing the closing times are getting shorter and shorter to try to make yourself more competitive. And it seems like you got to jump through some hoops before you do that. So.
Yeah, from a lender perspective, when you say that they can't even get to closing without that deck page, where does that throw us as far as loan approval goes for the purposes of the contract and any financing contingency they might have?
Right, so I mean, we work off a commitment date. And of course, we always approve loans subject to, flood and appraisal and all the other things that take a little longer. So I guess at that point, it's gonna be up to the buyer's agents and the buyers, like if they haven't, got their flood yet and their dates are coming up, then they're gonna need to ask for an extension. But that's why it's really important, like I said, a lot of times, work with your team. Like as a lender, I look, and if I get a flood cert, as soon as I get a contract, I pull that flood certification, for the property. So, and that's, like I said, the first question is, hey, selling agent, listing agent, can we find out if the seller is willing to transfer? Because like she said, you could start that right away, right? I mean, you don't have to wait. I mean, hopefully.
Well, the only downside to that, to protect the seller, if he signs away the right to his policy.
Right. Yeah.
But, it really legally, if the transfer didn't take place.
Yeah, I'm sure. Yeah. So that's the fine line, right? We have to figure out how early.
When are they doing it?
That's where the challenge is. And in fairness to the sellers, that can be a scary process for them.
Sure.
What if the deal falls through? But that it's also listed in the assumption form. The verbiage is there.
Okay, so then the seller, if you're representing a seller, really have to be careful about the timing and what they are committing themselves to legally, because the assumption agreement is a
But if the
contract
sale
between the
doesn't go
parties.
through, it reverts back to the
It
seller's
will.
name.
Okay, good. Very good. So that's reassuring.
I gotta say, I don't think I've ever had, I'm saying that's never come up in
Right.
any deals so far.
Well, I am not trying to be doomsday,
Yeah.
but it's just such a seller's market now that I could see if a buyer was, really trying to keep
Yeah.
their foot in there, that this would just, how much leverage do you want to give someone? But so it's good to know that the seller won't be completely out of luck if it didn't actually close. Okay, so someone asks if we could explain a little bit about what flood insurance covers when the property is not located in a flood zone. It's not required. So when you recommend it to people, what are the potential risks that they're looking at?
Flood is defined as any loss due to naturally rising water. And I see crazy stuff. My daughter lives in a gated community and we're on the community page. And I have seen, because we're not in a flood zone, FEMA will pay if we have a flood. False. If there's a lot of rain and the water rises from the ground up, that's a flood claim. That's not going to be covered on homeowners. It is specifically excluded in there. And there's not a separate flood policy for preferred risk or A zone or B zones. The flood policy is the flood policy. So the criteria doesn't change for the definition of a flood. I hope that helps.
I think it does.
There's a question in the audience.
Oh, I'm sorry. I missed that. Yes, thank you.
So we spoke about a buyer trying to figure out what that insurance might be for a particular home. And it sounds like it could be a mistake to ask the sellers what they're paying because it can be very different.
Let me just repeat
That's
it.
definitely true.
Before you answer it, can you restate your question so that I could say it on the microphone for the audio people?
So the question is, when a home buyer is looking to put an offer on a house and we're trying to figure out what the mortgage payment is going to be and what the insurance amount is going to be, it sounds like it's a mistake to say to the seller, hey, can you share what you're paying for insurance? Assuming that the buyer will pay the same thing. And
Is it, so the question is it an unsafe assumption to inquire of the seller the amount of their premiums, because it sounds like your buyer is most likely going to see a significant increase in their premium.
Yes, and that's correct, because like she said, the flood you can transfer. So that's really the only thing that might help you by asking the seller. But like she said, like I find a lot of times the listing agent or somebody will say, well, the seller's only paying this much. And of course they say, well, they've been in a house 10 years. So it's going to be a lot different than a brand new policy.
You know,
What do you do then?
to follow up on that, I get these calls a lot. My neighbor's paying this. Why am I paying this? Until someone has that policy in front of me, and especially now, we have investors that are buying down here. So just really quick, if they're gonna use that home for Airbnb, we have limited choices, because I don't want that claim to go to Warren if they have a loss because they're living in it part of the time, but then they're putting it on Airbnb the other part of the time. So the existing owner might not have that exposure. Everybody has different exposures. A lot of homeowners get upset when I ask them, do you have dogs? Why are you asking me that? Because animal liability is not standard in Florida. So, and carriers, sometimes they'll let you have a dog, but they're still saying, we're not going to cover the dog. So it's a conversation, you know, you are correct. It doesn't matter what the seller is paying, especially if they're not assuming the flood, because everybody's situation is different. If we all sold the same coverage, I wouldn't be needed. It would be an easier place to be, but there's choices and options, and premium is reflected within that, within those choices.
So,
So then how do you estimate
yeah,
for somebody?
so what you, and that's why I was saying, so let's say you have an insurance person on your team, you know, like of your real estate, you know, team. I would call your insurance girl and say, or man, and say, hey, we're thinking about this house, you know, putting an offer in, can you just give us an idea? A lot of times they're gonna want more detail. But you know, that's up, if you think it's a like if I have a customer that's pre-approved, I know this is a lot more elaborate, but let's just say, you know, we always pre-approve for payment, not necessarily amount. So everybody should be giving you, or every lender should say, the range is this because the payment should be this amount, okay? So if I have, like, I just have one right now and it's in Merritt Island and it's a $5,000 insurance quote, I've estimated $2,500, you know? Well, that's like almost double really for that insurance portion of his payment. So, you know, I go back and he's at a 49% and the max is 50. So, you know, that could, you know, do something, right? So then you have to say, okay, you got to keep shopping around, or, you know, you lower the loan amount or see if you could work it. But that's why, like I said, it's important nowadays is like to try to get quotes as early as possible and not let people wait until, you know, 2 weeks before closing or a week before closing to find out that, you know, they're going to have a much bigger premium.
Good practice. Back to the older roof scenario. Someone asks, will the insurance carrier cover an older roof at a higher policy premium amount, or will they just not cover it at all?
We are running out of carriers that will cover older roofs. Right now, I have 2 that will insure a roof up to 20 Citizens. The state insurance will go up to 25 years on a shingle roof if you can show greater than 3 years of remaining life. Once it goes under that 3 years, Citizens is also going to non-renew and say that they don't want to be on it anymore. So, and yes, the premium is usually higher. And what I've been finding is just because you get coverage, they're still going to go out and inspect. And when they go out and inspect, if they see granular loss or excessive wear, now they're going to say either we're going to cancel it, or if they're in with a surplus lines company, they're going to exclude coverage for roof losses unless a new roof is put on. So just, I always have the conversation with my clients. I have a report telling me it's good, but if they go out there and they see that it's not good, they're going to change it quick. And it's been happening. I'm seeing things I've never seen before.
And to dovetail off that, if they go out there and check it out, they might claim later on that it's pre-existing damage. So even though you have a policy now, when you actually make the claim later on, you say, no, that was before our policy period. You're not getting any coverage from us. So.
Yeah, that is a whole other can of worms. Okay, thank you for that. Someone writes in that they have a flood insurance example that the frequently asked questions on a recent listing on Longboat said that the homeowner's flood policy was 500, but when they checked with an agent for a guesstimate on a new flood policy, it was closer to 9,000. So that is definitely a humongous increase. Okay, well, we can maybe we can dovetail a little bit into, now we have a little bit of an idea of the problem, and we can talk a little bit about what is happening currently to address the problem. As Margaret indicated, this past Florida State legislative session, one of the items that our legislatures were working on was a reform bill that addressed insurability issues, and with the goal being to attract more private insurers so that Citizens, which is the state insurance company, is not so taxed from a claims perspective. That did not pass. It didn't make it through yet, but my understanding is that they are going to continue in the next session to take it up. I just recently heard some of the state legislators speak on the topic, and a member of the audience raised the issue of in solution brainstorming, how do you get to a point where you are encouraging private insurers to come to Florida, which, as I like to say, is very special. We have a lot of unique characteristics to our state, without giving up any accountability so that they have the reserves to pay the claims, because I think that's also part of why Citizens is so taxed, and simultaneously make it attractive for them to be here, if that makes sense. And you can maybe just share your thoughts on what you're seeing on the boots on the ground.
I'm not going to have the popular view here. It's not going to be popular at all. And I'm a homeowner. So again, I see both sides. But the abuse that I have seen since Irma and the amount of free roof, if you just go on social media and you see these roofing companies saying, we'll get you a free roof, we specialize with the insurance companies. I've had people try to file Irma claims up until last month. So one of the things that did not pass was to change the settlement basis for the roof from replacement cost to either a stated value or an actual cash value, which means depreciation. And when I see the rates doing what they're doing, the carriers pulling out, the reinsurance costs, the amount of claims that are open, I felt like we needed this change. And I know it's not popular, but we have a broken insurance market right now, and choices are running out. And one thing about Citizens, they may appear cheaper for some people, and they may take on risks that others won't. But what you're also signing in the contract that Warren mentioned is that if they don't have enough money in the catastrophe fund, if we have a bad storm year, there can be a hefty surcharge applied to your policy. So it's all there. It's on the application. It's written there. I explain it to clients, and I explain the hurricane deductible too. And when we have a hurricane, it's like they're hearing it for the first time, because insurance is boring until you need it.
Mm-hmm.
So
when you say that your opinion is not popular, which aspect do you think? Is it the wooing of the company's part?
no, the companies would love it. I
Okay.
think that would bring more companies. I think from the homeowners aspect, like Warren said in his introduction, there are people that are doing the right thing. They have their policies for 20 years, 21st year, they have a claim, and then why isn't this being paid? And I understand that side as well. I've seen both sides of it. So to tell a homeowner, and I go through this now, I think one of the unspoken secrets are, again, before this roofing crisis, I felt like we were in a water loss crisis with the limited water for $10,000 with the buyback. Now with the roofing to go to actual cash value, it feels like we're paying more and getting less. So as a consumer, it's not a popular choice, but as an agent, seeing how limited we are, and great, these carriers are open, but if they're not writing a roof that's over 10 years old anyway, I'd rather be able to get a homeowner's policy for someone that still we can't afford to put roofs on our houses every 10 years.
Right.
I don't know the answer. That's just my personal thoughts, that to me, a stated value would hopefully stop enticing these roofing companies to try to triple charge the carriers, because that's what's happening.
Okay.
So you mentioned some legislation that didn't pass, but this past July 2021, they passed a huge overhaul to some of the insurance type claims, and it addressed, these roofers going out there, and it talked about, this fraudulent type of marketing. And actually, the Florida, I forgot what agency was, just is trying to prosecute 2 different major roofing companies for these types of actions. Yeah, so they're trying to do stuff to signal to the insurance world that to come to Florida, we're okay. Is the legislation perfect? No. What legislation is, but they're trying to do different types of things to make it better.
Okay. I'd like to hear more about the legislation that did pass, and also the fraudulent claim side of it, because I think that the state legislature or the state legislator are facing what I perceive to be the problem in just this quick little presentation they put on, was aggressive or inappropriate litigation. So it sounds though like it's not necessarily the litigation part, or is it like, at what point is it fraudulent claims or aggressive litigation?
So there's really no clear line. So I don't know if you guys know this. In Florida, there's a statute that says if you are insured and you sue an insurance company and you win, the insurance company is required to pay your attorney's fees. So attorneys started seeing that and they said, oh, well, this is an easy way to get paid out money. And they started working with roofers and really gobbling up these claims to try to get more money. And I don't know if it started pure of heart or not, but it has gone out of control. And now the flip side of that is, well, if the insurance company would have paid my claim in the first place, I would have never needed to get an attorney. So you guys are the bad actors and now you're paying for it. So again, there's really no white hats in it. So the legislation that came out in July, it's not retroactive, so it's only going to apply most likely for policies after the statute came out. And what it says is before you can sue us, you need to have some type of settlement negotiation on the paper saying, here's the claim, here's my attorney's fees. Do we want to pay it? Yes or no? And then after that, you'll only get a percentage of your attorney's fees down the road. But also as part of that legislation, they talked about a lot about the roofers and the fraudulent marketing and this knocking on doors saying you get a free roof, which I think is a great step in the right direction.
But I thought they challenged that.
They did.
It
hasn't worked its way out yet.
Okay.
Well, I will always be employed.
I think I'd like to add that it's up to us, all of us in the real estate business, I think, as well as consumers. If you talk to your neighbor, I was telling Margaret the story, my neighbor I was very upset with him because he was getting a new roof by some company that knocked on his door. And I explained to him, that's costing everybody here, and this is before it was even that crazy, trust me. So I actually investigated myself and, pretended I was going to talk to the guy and stuff. I was telling her. So, it's really important if we can get the word out there to everybody, your family, your friends, anybody you hear that says, oh, some guy knocked on my door and says I can get a new roof. I think if we get that education out there and, the companies and our legislators are gonna put that out there and educate, and then you'll see maybe some of the people understanding what they're giving up their rights when they do that, and I think that will help get some new companies to open here again when they see that enough of the, hopefully consumers and the customers are gonna realize.
This didn't happen overnight.
Yeah.
Right.
It's already happening with the water losses.
Mhm.
And then, when Irma came through, it just kind of fed the fire. And
Well, to play devil's advocate a little bit, if someone knocks on your roof and says, hey, you actually have a covered claim, you have the right to know that as a homeowner and an insured. It's just, as you said, where's the line between one is it gray area or is it really, really fraudulent? So again, it's always in the middle, because if someone knocked on my door and I truly had a claim that was covered under I have the right, of course, to file a claim.
yeah, but do you want to sign your rights away to your claim?
That's true.
See, they're having people sign what looks like a work order,
Mhm.
and they're saying this is now we own the claim. So now that homeowner loses their rights. Would you agree on that?
So that was called an assignment of benefits, and it really was rampant, but the legislator has actually cracked down on that. They passed a new statute that you can't just sign a one-page document. It requires a lot of different statements and a lot more loopholes to get an assignment of benefits. Let me put it that way. And that's already in place. So you've been seeing a lot less AOBs.
Yeah, because Warren, I addressed that, you know, and they told me that I didn't even have a right to talk to the insurance company once I signed that form. So only the roofing company could talk to the
Well,
insurance.
I think that's a great signal out to the insurance companies that we actually really put not a stop to it, but they've reduced it quite a bit, putting the requirements, because before it used to be like a little one piece of paper. Okay.
They didn't know.
They had no idea, but now you need a little bit more informed consent for it.
That's great. I think that it is, this is good education on consumer rights, period, which we're going to go more into, but we have a question.
Dude, with the roof, now I know the condominium, the association's responsible for the roofs. And when the roofs were done 7 years ago, they were given a 25 to 50-year GA warranty. So what does that mean to a homeowner? Well, I put this new roof on, I've got this warranty up to 25 years, but the insurance company's gonna cut me off at 10.
They're not necessarily going to cut you off at 10. That's the requirements for new business. So a lot of companies, what they're doing now is they're sending out inspectors to inspect the roofs as they start aging. So it's not an automatic cutoff that just because your roof is 10 years old, that they're going to, tell you have to get a new roof. But for the people who say, are buying homes and the roof is 11 years old, but there's still good roof life, but I wouldn't want to get a new roof at 11 years old. I just wouldn't. So that's the difference there. This is eligibility for new business. And then more and more carriers are doing visual inspections where they're doing, they're sending in the photos. They're hiring inspection companies, and that's another reason why we see the rates go up. They do it at their expense, but they're trying to mitigate the amount of losses for wear and tear.
Oh, it's okay. Go ahead.
So could it be like up to the insurance company? So if you have a buyer going to buy a house and you see on the listing that the roof is 11 years old, but then you go there and like we got a metal roof, spent a lot of money on it,
And there is more longevity guidelines for the metal roofs, just so you know.
Right, so it would definitely, you don't want to walk the buyer away from that. You want to go and just check it out and then get your insurance.
But some carriers that they're not even taking new business because of the year the house is built. It's that hardened and tightened right now. We've been through this before. That's the good news. I mean, we have been through after Charlie Wilmer and Jean
2005
through here. We kind of saw this happen, and the rates went up and choices were next to nothing. So I do believe we will come out of this, but it's a time to be careful and choices will be limited the older the roof. Metal roofs do, like I said, there are more carriers that are more open to a metal roof that's over 10 years old. But it's because of the expense. Like that's why even some put the 10-year limitation on the tile. Just to give you an example, one of those roofing claims where the assignment of benefits was signed, the roof really technically should have been $60,000 for this type of house. The insurance carrier paid $120,000 for a tile roof on, I kid you not, this house, 2,400 square feet, if it was that big under air. So that's why the carriers are in the position they're in.
Someone asks if what the maximum years, so along the same vein, we heard 10 years for shingle and for
Depends.
tile.
There are some that will take up to 15.
Okay.
Some that will go up to 20, but the older the roof, the more limited your choices are.
Okay. Just to play devil's advocate, what are your thoughts on, so that story sounds pretty egregious, the 120,000 cost of
And
the.
that's more the roofer.
Right. So there's a lot of consumer issues at play, but my concern on behalf of consumers is the ability to pay claims. So that year 2005 was was a great example because many of them just went out of business because we had a year where a lot of people were making claims at the same time because we had 3 hurricanes tear through the state. I think that year is one of the things that scares a lot of insurance companies, private insurance companies, away from the state of Florida, because you can have fantastic profit-making years and then just have one bad one that wipes everything out. But on the consumer side, though, my thought is that there should be some regulation that says that insurance company, you have to have a certain amount of money at all times. You can't just distribute profits out to your shareholders and your owners and then say, oh, all right, we ran out of money in 2005. So how do you balance that with needing the insurance companies to come here?
So the reserves and the reinsurance, it all plays a factor in the rates. And we just had 2 carriers go out because they posted awful fourth quarter loss payouts. So when they're regulated by the Department of Financial Services, they are required to keep a certain amount of capital and report that information and secure a certain amount of reinsurance, which is why we're also seeing limited capacity, because a lot of the carriers are securing their reinsurance now. So if they write X amount of business, then they're going to require to carry that much more reinsurance. So they're careful on how much they're placing, and there's a lot more that goes into it than I have the time or the knowledge to explain. Warren might be better at that.
It's all dollars and cents. If you want them to have bigger reserves, they're going to want to have more money from you guys because you're not paying out their profits as much. It really is a game, and I feel bad saying that, but it's dollars and cents. It's what it comes down to.
Yeah. And then when you have the amount of claims, for example, when I went to my insurance convention in June of this year, I sat in on a class and they estimated the claims to be, let's just say 9 billion as a result of Irma. And because we thought Irma would be worse and we weren't as impacted as we thought we would be. Well, 3 years later, I think we surpassed in June of 2021, I think they were saying we were going to surpass 30 billion. So from 9 billion to 30 billion, that's just Hurricane Irma claims. And they were still being filed at the time in June of 2021. That's also another change. It went from 3 years to file to 2 years after a named windstorm to file. So again, hopefully that they were hoping that would attract more companies to come here. But Warren's right, it is dollars and cents. And again, those claims, that those dollars matter. And if it's a legitimate claim, yes, it should be paid. But there's a lot of people that were using the roof claims as a maintenance instead of a catastrophe.
Gotcha. So as far as the dollars and cents go, there's no real solution other than to know that we're just maybe going to have to pay more if we wanted more choice. How do you see, how does citizens versus private companies kind of come into that? Like, is it the most beneficial thing that you all can see that you're seeing in your industry that the private companies, we do want the private companies, that we do want the competition? Would it be better for Florida if we just had our own unique type thing? No, not at all. Not even a little bit.
In a perfect world, insurance companies would pay out the right amount when they need to, and people wouldn't make claims when they weren't supposed to. That'd be in the perfect world. I know you brought up the example of, getting paid $120 for a 60 roof. Yeah. I've had people come to me, they're giving me $8,000 for a 60 roof. So, well, and now I'm getting involved. And it's just, it's just a mess. And then some of that 30 billion, I mean, how much of that is attorney's fees?
Yeah, I don't know.
It's crazy.
So do you have any suggestions on how you would maybe reform that? Or what consumers can do to, number one, exercise, their dollars in the best, as for the best leverage, or maybe what we should be looking for when we're shopping insurance companies?
I would look for one that pays out. Only because, it's just so bad when something happens to your house. I mean, that's your safe place, and you just feel violated when they tell you, oh yeah, we're not paying you any money. So I would look for one that has good reports. They'll work with you, and they'll pay out money. That's what I would like as a consumer.
Right.
As a
Is
consumer.
there a place that you can check that, Margaret, do you think? Is there a way to know if an insurance?
Call Margaret.
Insurance company? Sorry, I didn't know that.
No, I don't know. But
Yeah,
she
she might
should be
know.
a great resource, and
Yeah.
you got to talk to your insurance agent because they know.
Yeah.
They're in it.
And a lot of what I do, it's funny because I will ask water restoration companies, reputable ones. So who's been treating you right? Who's doing well? Because I'm an agent, but I don't see the claim. Like I'll take the claim. I can follow up on the claim, but I am in no way, shape or form, once that claim is filed, I'm not a licensed claims adjuster. And the carriers, they keep us out of the loop in the dark unless I call and ask for an update on that claim. So a lot of times I have no way of knowing unless my client called me directly. Then I can call up and say, hey, how did they treat you? I don't know there's a problem until, and I don't get a lot of claims complaints. It happens. It's not always a perfect situation. And then sometimes when I get a complaint on a carrier, I'm really surprised because they've done so well in the past. So a lot of times it depends on who came out, who's working the claim, who the adjuster is. And sometimes it's not always a reflection on the company. It could be an outside party that they've hired to say, they're just going by what's being reported to them. So it's important to keep that in mind. And most importantly for consumers, again, insurance is boring, but pay attention to those exclusions. Everything can look great when you get that low rate. I had a client with a renewal call me. Her renewal was $1,900 and someone quoted her with the same carrier for $1,000. And I said, I promise you, we are regulated so that, my rate is the same if the coverages are the same and her insurance score was run, then it's all good. Sure enough, it was 5% deductible. I had $1,000 hurricane deductible. No replacement cost on the personal property. This is all boring. I'm already speaking another language, but when you get to a claim, it's no longer boring.
Yes.
I would like to know, is there a website that we can go to find like top 10, 12 insurance carriers based on the reserves they carry, how they pay out? Is there any way for us to know it?
There is, if you go to the Department of Financial Services and the insurance regulation sites, it's all public information. Okay. You have to dig around a little, but I actually have a chart of, who's where and who's doing what and who hasn't reported yet. So it is
going to get your contact info.
It is public information.
Okay.
Once they file. If they don't file it, then we can't look for it.
Writer asks that they're still confused about assuming the FEMA flood policy. So is that handled by the closing agent, the buyer's insurance carrier, or totally between the seller and the buyer? What would you advise agents who are representing a buyer customer?
How would you get
that ball
hold
started?
the flood policy in my office, I'm the one who has to facilitate that transfer. I'm the one who has to work with the owner of the policy and then the person who wants to transfer the policy to make sure it's done. As far as the premium, that is to be worked out between the buyer and seller. Maybe they could get the title company involved to put it on a settlement basis. I mean, I don't know how that exchange of dollars is going to take place. I don't know if that's the realtor. I don't know who gets involved in that, but that is to be handled between the two parties involved in the proration. When it happened in my office, I will give you an example. They agreed on a price. We prorated it as best we could down to the day of the date of the sale, calculated it that way. And then what they did for me was they sent the check to my office. I put it in my account and I sent the refund back to the seller.
Okay, so that would be one way to handle it.
If the agent's willing to do it. I mean, it's more work for us. I
Sure.
did it. Not every agency has to do it. Every agency has their own policy. That's what I'm saying. It's definitely between those two parties.
So, because a lot of times we talk about best practices and managing expectations. So if you're an agent or a broker that has a buyer customer that you're looking in a flood zone, that would probably be on your radar screen to talk to your buyer, to talk to the other agent, to see about the assumption of the policy. And then would it be fair to say that, are you able in the assumption process to provide what the annual premium is and the date that it is paid through, so that it seems to me the title agent would be the natural person, just like you would credits and debits, to be able to give the parties that information so that they can determine or amend your contract so that policy can be
And like I
prorated
said,
at closing.
I've seen agents do it both ways where I've seen agents say, I'm not getting involved with that, but it's not hard to figure out an average daily proration.
Right.
where it's 365 days in a year, 12 months, and we figure that out. And
Well, from a title,
and then what I did, I had them sign a separate form that they agreed to this proration.
Okay.
That's how the money would change hands.
yeah, I feel like from their perspective, what they want to know is, I don't believe, I'd have to go back and check, but I don't believe that the FAR contract forms really address the assumption of the policy. So this is going to be new territory, as far as amending your contracts to have that proration be handled. I'd have to double check, honestly, caveat. I'd have to look to see if the contract addressed the proration of the assumption of existing policies. But from someone who is the title agent, my perspective is that as long as I know the amount and the date it's paid through, the prorating of it is, a pretty simple thing to throw on the closing statement. But from y'all's perspective, I would say that to the extent it's not addressed in the FAR contract forms, you should be amending your contract to make sure that your seller and your buyer are obligated, number one, to proceed with the assumption process, and on the seller side and on the buyer side, to provide that credit at closing for the proration of the existing policy. So that is something that we would have to look at next up, reviewing the FAR contracts to see if they're addressed.
Does the buyer have to be approved to get the flood insurance? If they
No.
want to do the assumption,
Great
like you just
question.
assume that it's gonna happen.
Flood is, I wish it was this easy in homeowners, but for flood, no, there's no insurance score, there's no requirements. It's just, we agree to assume this policy, and, they do the change. It's not quick, always. I will emphasize that they do need some turnaround time depending on the volume.
Silly question, probably ought to know this answer. Has the maximum amount of coverage changed for flood?
So that's a great question. On a standard flood policy, the maximum amount you can secure through FEMA is $250,000. But there is excess flood available, and everybody should be offered an excess flood policy as well.
Would that be from
But the lender doesn't require, maybe you can speak to that. The lender only requires up to 250,000, and a lot of people get programmed. Well, if the bank doesn't think I need it, then I don't need it. But excess flood coverage is absolutely available over and above what the FEMA limit covers.
The question that you just answered was, is there a change, or what's the latest maximum on flood insurance? So maximum coverage, and then just to kind of recap, lenders require 250, but you can purchase
Excess
an
flood.
excess
for the
flood.
replacement cost of the home.
Okay,
Absolutely.
gotcha.
And excess flood coverage generally is less expensive than not every time, but in most cases, it's a lot more affordable than the initial flood policy is.
Okay. David Clapp notes to everyone, yes, the FAR does include prorations on existing insurance policies. So that's good to know. And then let me see, there was another one. Is the assumed policy only valid for that year? And I think this kind of also segues into your question a little bit about approval required by the carrier, but will the buyer potentially face any hardship renewing that policy in the following year?
No,
They should
they'll
not.
they will see increases. This is going to be the new normal. I believe on the glide path, I believe it's 18% per year until those people with the existing policies get to the at-risk rating on the new single risk modeling. So even though they assume that policy, they're going to get the 18, whatever the percentage of the increase is every year, but they will get a renewal offer.
Okay, great. And to further elaborate, David quotes that paragraph 18K says buyer shall have the option of taking over existing policy of insurance if assumable, in which event the premium shall be prorated. So that's good to know that we don't have to worry about amending the contract to provide for the proration. And then I would just want to follow up with Dave to ask, how does he feel about including in the contract that once we start having the conversation about assuming to obligate the seller to be cooperative, and maybe that's already in the contract too, in the assumption process. Okay, someone would like to know if we can receive everyone's contact info, and I would be happy to share it if you all are agreeable to that after we're done.
Fine with me.
Okay, David says, no, that is not in the contract. So to the extent that you want your seller to be obligated to assist with the assumption, that might be something that you have to look at adding and incorporating into your existing contract. All right. What have we not covered? Is there anything else from someone's perspective that, from your perspective, having customers that are dealing with the market in particular, or how would you, any other requests for best practice suggestions as we try to navigate this hot seller market? Is there anything else that we feel like we need to address? I can't remember if this is supposed to be a 1 hour or 2 hour.
This is not, I don't know if this is your area, but you just do homeowners insurance.
I do a mix of things, but yeah, give me it.
Something came up in our office, a conversation about like home warranties.
Mhm.
And whether that's a good idea. Could that wind up helping people get qualified better in case something happens? Like the seller. So the seller offers a home buyer warranty for some of the appliances and things like that. I mean, I know that's insurance, but that's not what you do your homeowner, right?
So I don't know if it's going to affect getting a mortgage or reduce your limits or not. Some people have home warranty companies. It's similar to insurance, though. It's a contract. Some things are covered, some things are not. If it's a good company, it might be worth considering. Just for disclosure, I don't have one, but I know some clients who do have one. But in terms of how it's going to help you down the road, I'm not sure.
It won't help with the insurance at all. No,
I don't believe they cover roofs.
No, these are
correct.
yeah.
If they would cover roofs, maybe that would
Yeah,
help.
that'd be great.
That would put some pressure off of the insurance companies, right? If you could get a home warranty for the roof.
Could you expound upon October 1st and exactly how the new modeling that FEMA is going to start doing is going to affect? I know we're all in flood zones, but right now, if you're in X, is that going to mean that you're going to be required to have flood insurance? Like, what's going to happen October 1st? Because that seems like
It happened, but do you want to restate that for the?
Yes, I'm sorry. I was actually also reading a new question in this. So do you mind repeating it one more time for me?
Earlier, you said something, a new legislation that's occurring October 1st of this year.
It's already in place. FEMA went to what's called single risk modeling.
Okay, so that happened.
It's
October
in
1st of
place,
last-
yes.
of 2021 is when it happened. Okay. So that really, if you're in flood zone X right now, you're still in flood zone X. Is that what that means?
The rates did change. I will tell you, at flood zone, the rates used to be the rates. So if you were in an X flood zone, you might pay a maximum of $568 a year or $612 a year. Now, I just did a preferred risk zone, so the lender is not requiring it, but their flood insurance, if they want it, is $3,000 from FEMA. My house used to be, if it was $560, I quoted my house, I'd be $1,100 now. So coastal areas of Florida are really feeling it. Areas in Florida that are further away from the coast, this is beautiful for them. They're seeing $300 a year or $200 a year rates. So for us in coastal areas, it's definitely having an impact.
Can you just explain a little bit about what the single risk is versus what we used to have to kind of better understand? I think this is what we were emailing about, the increase in flood that was expected and I guess is about to happen.
It's happening. People aren't realizing it as much because if they're not required to have it, they're not as concerned, or they're assuming the flood policy. But basically the way it used to work, when FEMA first started this, they haven't overhauled their system until now. So now they're using more software to go specifically to the property itself and the distance to water, the replacement cost of the property. They're calling it a more equitable way of
Warren grimaces.
Really, if you're coastal and you live near the water, we are seeing increases. The ones that aren't seeing it as bad. And I was talking to an agent in New York about this on Lido Beach, and the stilt-built homes. So they're not seeing it as bad as the slab-built homes. But the slab-built homes, we are seeing significant increases where if a policy was 2,000 to 2,500, I'm seeing 5,000 to 10,000 as the new normal.
That's quite a hike. And when is that going? I know that the bill went into effect October 1, but when will the consumer see that increase at the
We're
renewal?
seeing it. I mean, I'm giving these numbers out, you know, here's the FEMA quote. We do have private flood options, and some homeowners carriers will even add a flood endorsement onto the policy that lenders will accept. It just, you know, depends on what the lender requirements are and if they'll accept it. And a lot of times it's better than what the FEMA policy is offering. Whether that will change, that's my concern, is, you know, they're rating it the old way. So now when they see the single risk, what will that look like in the future? Like I said, this industry is changing by the day faster than I've ever seen.
I think if people didn't understand the old way, from what I understand, is that when you got an elevation, they would give the insurance company a number, you know, like a number of how, you know, like how high it is off of the base elevation. And that's the difference. Now it seems like it's more of a geographical, how close you are
to come off of that, yes. So people will now give me an elevation certificate, and that $5,000 quote might become $4,700, even though it has a +2 elevation. And I, you know, when this first started happening, I called and I said, how can this be? How is this fair? And the way it was explained to me was because in June of this year, again, at my insurance convention, even the flood people didn't know what was coming down the pike. I mean, can you tell us what's coming? And surprise, it was here. And basically what they said, I mean, I went to FEMA on this because you know, I had a +2. If the base flood was 8 and the top of bottom 4 was 10 feet, normally that would be a great flood rate. So I thought I was doing something wrong. Nope, I wasn't doing anything wrong. They were going by distance to water, and to add fuel to the fire. I live down the street from this house that I'm not as coastal as most places are. Yes, I'm on a freshwater lake, and this house is literally just not even a mile down the street. And my rates are 1,000, and this house was almost 5,000.
Wow.
So again, your next door neighbor might be paying one rate, and the software can hone in and give a completely different rate from someone down the street or even right next door.
Do you feel like that's why it's changing so rapidly, is just the technology has actually made them be able to be that specific in analyzing risk for that particular property? Or
I think that's part of it. I think that's part of it. I think for years, you know, even FEMA is paying out more claims than what is coming in. So I think they had to do something to kind of make sure that they're in a position to pay. Like you said, are those private flood markets going to be there? I personally am excited over private flood. I think it's a great option. You know, being in this business as long as I have, people used to be so upset that we didn't have choices. And then when we get choices, they get scared and they want to depend on FEMA. So a lot of times private flood does offer enhanced coverage, like loss of use, replacement cost on your personal property, swimming pool, you know, draining and refilling it because that water is dirty. None of that's available on a FEMA policy. So I'm encouraged about the competition. I'm just hoping it gets better.
okay, there's a couple of questions and I'm going to take them, but just as before we leave the topic of the flood in particular, so the technology is one factor. Does that program or software that you mentioned, does it try to look into the future as far as rising sea levels, dare I say that, or any other kind of environmental factor that could shift the landscape of Florida and our risk?
That's a great question that I'm probably not qualified to answer because I'm still, you know, truthfully, I'm trying to figure out this new rating myself. You know, I had a client where the elevation certificate did help, you know, so I don't want to say elevation certificates don't help. It could be a useful tool and it saved them about $1,000. But when I called up to make sure it was correct, because this is a new system, They couldn't even tell me. They said, you'll know when it goes through underwriting. Go back to the client and say, okay, here's the worst case scenario. Here's, what I believe it will be, but it has to go through underwriting. And that's the best answer I can give. It is so all over the place. I'm still learning.
Okay.
I hope to know more.
Hot off the press a
I'd
little
love to
bit,
come
yeah.
back and talk about it, but I don't know the answer.
Well, we will look forward to that, certainly. One attendee virtually asks if you, Margaret, would be able to give guesstimates for policies to buyers who are considering making an offer before they make the offer. Is that something in your wheelhouse?
If they have a property address.
Okay, so you just need to
Yes.
have kind of
I got
identified
an
it.
email yesterday asking, we're looking on the water. What, can you, I wish I could.
Right.
But because the technology is so specific, yeah, I could give a quote and tell you what they're looking at, definitely.
From a lending perspective, when people are talking about making offers and they are talking to Margaret about, this is the property I want to make an offer on, just knowing what the market is right now, do you feel like you need to have this information ahead of time to know whether they're even going to be able to?
Well, I know it
Get
sounds
that.
funny, but actually it's a little trick in my own head since I've been doing this for so long and I've been in this market for so long. I kind of like, when we do pre-qualifications, we have to put a certain estimated tax bill, estimated insurance, if we know, if a flood is totally like, there's no way to know that because we just don't know where people are going to end up buying. But, so I usually know, like, based on like a square foot house or, certain things that I get pretty close. In the past, I've gotten pretty close. And so it's like, well, oh, wow, I was like, oh, look at that quote. It came in exactly what I, close to what I estimated. So yeah, that is again, it's up to your lender and, and that's why it's important to work with a team of your people because, if I have a marginal customer where they're just right at the border, it's going to be a big, concern. If it's, somebody that's well qualified and, maybe they have a lot extra money that if they knew, we always, address it and say, if this comes out higher, then, you might have to put more money down or pay off some kind of debt, to qualify. So yeah, it is definitely a concern, and as a good lender, or somebody that's going to be due diligent, I would say that you should definitely ask that question to when you get a pre-qual letter, maybe that's something you want to make sure you ask, well, what was your payment supposed to be? Some of the more experienced agents will know that, if they see a flood, if the property that the person wants to see, maybe is in a flood zone, then that's going to be a red flag right there to say, well, this is the top of your budget. Maybe we should just check with the lender first to make sure that you still qualify with the flood. Then we'll have to guess. Sometimes we do 1,000. Sometimes we could do 3,000. And if you're more conservative, use the higher number to see if they, it's going to come out okay. So also the cost. A lot of people forget that the higher costs of the insurance and the flood is going to affect the cash to close as well. So if you have a first-time home buyer and they're looking at a flood zone property, you got to make sure they're going to have that extra 1,000, 1,500, whatever, 2,000, that they're going to need to close, because we're going to require that flood specifically. And I want to say 95% of the lenders are going to require that flood be paid in full prior to closing. That's the only thing we do not allow to get, to be paid at closing. We want to see a paid in full receipt before we'll, put in a loan for closing, because we're going to check the flood is adequate, and then we want to make sure it's paid. So that's also a, little thing to make sure you keep in your wheelbase. If you have a, first time home buyer who's like maybe just, just making it with their funds, it's something you really want to look at.
Yeah, that's a very good point, because you don't want to get to the end of your, at the closing date and realize that you spent all your money on flood insurance.
Well, and a lot of people like, I can't get out of closing. Like, that's the one thing, that you have to pay, usually in advance.
Right. That is flood specifically. Someone writes in, could we please talk about the start date of October 1 for new business, but there is an April 1, 2022 date for renewals. So just if you could explain a little bit about how that works and what people can expect.
It's the second phase of the single risk modeling.
Okay.
Where they're, I haven't seen a whole lot of changes. A lot has to be done behind the scenes at the agency. If people don't see their renewals, call their agent. We are seeing that where some of them, they need a piece of information in the system. We're having to check every single flood policy to make sure that renewals are generated. So definitely a good time to watch. I know we don't like wait for the mailbox for our flood insurance renewals to come, but there are changes in place. And that's where you're going to start seeing the glide path that I talked about with the increases. I believe it's 18% per year. Don't
Question, if your insurance policies, like your homeowners and your flood come up for renewal in June, you renew them, will they just send you another bill for the difference on October 1?
No, this is rolling, with the renewals.
Can you explain a little bit more about the April 1st date and renewals? So if my policy is up for renewal in June, did I just hear you say you have to take action in April?
Well, no, you don't have to take, we at the agencies have to take action.
Oh, okay.
We're taking action consistently on these renewals because they went from an old system to a new system.
Gotcha.
So, like, for example, we had a client that did not get a bill, and the reason they didn't get a bill is because the new system said they needed something that the old system had. As ridiculous as it sounds, we had to redo it, resubmit it, they fixed it on that end. So it was just interesting because if these agencies aren't keeping up on it or something falls between the cracks, you don't want to lose that flood policy because writing a new one, and that's why I'm saying watch for your renewal. It's not fun to get an increase, but you definitely don't want to fall victim to having to secure a brand new flood policy that your lender is requiring you to have.
Right. Yeah, that's huge. Could you talk a little bit more about the glide path? Someone else says that they also are seeing up to 18% for the glide path. Just started like,
So
I know
that's-
nothing.
Yeah, and it's a great question. And basically what it is for the transition to the new, I guess it's FEMA's way of saying we're going to gradually, this is the new way. Yes, you were rated with an elevation certificate. We're not doing that anymore. And, we're not going to increase you all at once like a new consumer purchasing a flood policy, but you are going to go up by X amount of dollars per year until you get to the at-risk rating. Then, it'll be whatever the percentage of the increase is.
And
But
is
pretty
that
much count on
18.
significant increases every year.
until we get to what they consider to be?
Right. For example, my client, he's tickled. He's like, I can deal with 18% a year because it's a lot better than paying $5,000. He's $560. So he'll take that 18% increase year after year, as opposed to paying the $5,000 per year, securing a new flood policy.
Okay. And then number 18 is, how did we come up with?
Again, sorry, that's something that FEMA came up with and that we were not even aware of. These changes came out in October, and I think we got the manuals and everything. I was lucky to see it a week before,
Okay.
we were not sure, and we're still learning. Is the elevation going to help? We're still asking, and it's frustrating to see how we're being impacted on the coastal side.
Yeah, it sounds like it.
If we're gonna say we're not as risky, you can get some money back.
No, I doubt it. We have to move away from one, out of Florida.
I was gonna say, that's not anywhere in the state. Okay, so we're seeing up to 18% as we go, as we renew. And I had a question and I just totally spaced out and lost it. It'll come back to me. Does anyone have anything else that they want to bring up or address?
I would just ask, are there any resources for clients to help them understand the issue that you spoke about before, where you can have your homeowner's insurance and someone else can quote you something like for half the price, and most insureds don't understand what's going on. They say, hey, that's cheaper, I'll get that. But yet you look at the deck page and, there's the deductible is, next to nothing, and because that happened to us too.
Mm-hmm.
And they need to understand
Right.
what they're doing. It might help for the mortgage piece of it, keep their fees low, but.
Call her.
That's a great question. And honestly, what I do, and I tell my clients, I'm going to show you the cheapest. and then we try to give comparison charts to show the cheapest and the main differences in the coverage, and then, you know, what they're giving up. So without the replacement cost, with the replacement cost. And usually, you know, consumers are pretty smart. When they see that stripped down coverage, it's rare that they take the stripped down coverage if they know they're, you know, that's what they're signing up for. But as far as, you know, I would say, you know, the agencies that do a Facebook page or a blog, you know, there's a lot of information on insurance agency. I blog about this all the time, you know, replacement cost, hurricane deductibles. A lot of people don't know that some carriers, you know, offer $1,000 hurricane deductible. What is a 2% deductible? What's a 5% deductible? You learn when you have a claim, and, you know, it's not a fun time to figure out what you have.
I can add a little to that. When, as a lender, we require minimum coverages. So sometimes, you know, we have to help people qualify to buy the home, and everything is about education. You know, if you tell the customer, you know, this is the, like she said, you know, there's a stripped down policy, and then there's the stuff that's surplus, right? Or something that's an option or whatever. So I think as long as, you know, a lot of times I'll have a customer say, well, I got these 2 different quotes or 3 quotes, and, you know, they ask me, you know, why is it different and stuff. So I always say apples to apples, you know, look at each, you know, the dwelling coverage, look at each item. On most of the quotes will have itemized, right?
Yeah, but there's things that are, there's little check boxes, and this is why I tell people not to do it yourself insurance either.
Yeah.
You can inadvertently check a box and exclude water loss coverage, theft coverage.
No, but I'm saying when they have 3 agent quotes, you know, and they can look at it and talk to their agent about what's the differences, you know. But most of the time, like I said, sometimes I'll have to call the agent and say, we need this to be $300 less, you know? So, you know, and then it's up to the customer if they're, you know, if they want to do that.
You mentioned those nuances. So can you just give a quick like synopsis of those little categories that might be different? Like wind comes to mind. I feel like that's in hurricane time. We hear a lot about, oh, but if it's wind versus water.
Screened enclosures, every carrier is different. So if there's a pool on that house, you know, sometimes if you exclude it, there's no coverage there. And that's the first thing to go in a storm. You can sometimes certain enclosure coverage, sometimes the whole thing is covered for replacement costs. Sometimes there's a buyback for $20,000, but they're only covering the metal, not the screening. And this is all stuff that people don't realize. They see a $10,000 limitation. We had a client, she had a 3,000 square foot screened enclosure. You know, you would go towards the higher end and not give a $10,000 limitation on an enclosure of that size. You know, replacement cost on personal property. I say it all the time. But do you want to go to Goodwill that's right around the corner and replace your items? Or do you want to be able to go to a regular furniture store and replace it at today's value? Because if you have actual cash value, that's adjuster's discretion. And a lot of times that's the first thing that I'll see omitted. So people will say, why do I have so much in personal property? Reduce it. Well, a lot of times if you reduce it, now you can't have the replacement cost endorsement. So and a lot of times in claims, I get an email, do I have replacement cost? And, you know, and again, I do the charts for me too, because I want the documentation. I never want someone to come to my office and say, why didn't you tell me? Why did you give me this stripped down policy? So the comparison, you know, it takes us a little bit long. It takes us a lot longer. They're not done. It's not McDonald's, and it takes us time, but it does help make it a little easier to digest instead of opening 5 attachments in an email and, you know, printing out tons of paper. Just my 2 cents if it helps.
Yeah, definitely. Someone asked